Alright, so this is round two of trying to find some targets. And in here, in this chart, we got a couple of strategies, almost too much, but we're gonna try and make it work. So we in this strategy, I used an indicator where it gives me automatic support and resistance lines, and then I use a Fibonacci, and I make certain uh, levels of standard deviation, and then I have it match up with the tops and bottoms. So as long as these catch the tops and the bottoms, at some point I'm like, okay, yeah, like it looks good, and then I transfer it over. So that's one point of interest is just strong support and resistance. And then untested breakers is another one. So this breaker got retested. So then we're thinking, and these purple bands are related to this other indicator. So these pivots are kind of like magnets, and it really works well on the H4. An example would be, let's see if we can find a naked pivot that's been touched already. We just have to look a little higher. I mean, this is a naked pivot here, and it's already been touched because, it's above the ones that I didn't select. So we zoom out here, and there it is. Got touched right there, and it bounced. It bounced pretty hard. It almost said that that's the bottom. Like if you went 1%, if you got an entry 1% below this low, or it looks like it went 8% below. But you know what I'm saying? Like it's not bad for an entry on spot. And so we mapped out these naked pivots that are untested on the weekly and the H4, and we transferred them here. And usually I marked out correctly. The gray ones are for weekly, and then which seems like here on Matic, it's purple. So this Matic, Matic. So it's a little bit above. I'm thinking this one's the weekly one right here. So let's go ahead and just reclassify it really quick. I mean, we could have just did it over here. But I'm thinking that and this one, they're both weekly. Right here. So we'll reclassify this. Okay, and then I think I didn't get any H4. If I did, I really didn't record it. Yeah, there's no H4 naked pivots that I got. I mean, there's one right here. Yeah, well, might as well record it. Posterity purposes. No, this is a purple one. Okay, I mean, it looks like I didn't even do this one. I just did the weekly. I mean, here's one. That looks better. Yeah, that's it there. This one is one. So maybe this is a 2024 one. Like this super mega Hail Mary. I think those are the 2024 ones like this. So now that we got a realm of possibility of options, we can walk through it. So liquidity is definitely an option. If we were to hit support, equal lows, maybe this would be 65%. So that's a possibility. So we can put this as a ranking between 65% to, if we touch the naked pivot, like 80%. So that's kind of what we'll title this: 65% to 80% with high confidence. So that's what we'll put Matic as, and then we'll get a new section, and then let's add a couple of them. So then at least we have four kind of categories, and we can separate high quality. So that was kind of just a quick, uh, thorough analysis of where it can go, magnet status wise. Like we're looking for an untested breaker, but this breaker's been retested. Next, we look for a fair value gap where it could fill, and then also where the naked pivot is. So it looks like hitting right here is a high chance, and it could even continue going to this level. But the question is like, if it only stopped at the first point where we're thinking the first target, like this is target one, this would be definitely target two, right around here. So if it's only stopped at target one, that's kind of just the distance we should see. We shouldn't see too far past it, and we'll figure out a way to scale out if we're starting to see market structure breaks to the upside. But as far as a first target, this is kind of just the range that we're dealing with, that we want to kind of classify as like the potential. And 65 to the purple for equal lows, and I'm expecting 20% on the S&P 500. And here it's almost equivalent to like 40 to 60%. So 60% seems to be the average among the alts. And then we're looking for like some of those potentials that can just really go far. And Matic looks like we could at least go to this weekly naked pivot, 82%. So that's kind of just the way we're kind of classifying that target. So here we got the same setup, but we don't have any breakers. We just have liquidity with order blocks on the weekly and fair value gaps. And then we also have the auto SR lines. And one strategy we could do is using these breaker candles, seeing where support would be. So here's one kind of zone. So if we went to here, roughly, that would be 60%. So, and then if we went to full and hit this naked or fair value gap for resistance here, 66%. So 60 to 66%. That's kind of what we'll put here. And then if we get more, even better. It's just we have to kind of have some kind of realistic estimate, and that's kind of just how we're gonna have to do it. All right, so a lot of these have sold off a lot, but there's still good alpha that we can get for putting us high up in the rankings. And it's really hard to find assets that can do more than 60% on the downside, even 80%. So like it's even with a leveraged ETF, it's just not. It's a little hard to imagine anything related to that. I think down the road, SRS and GLL will definitely shine. It's just not right now, and not into 2023. I think it's going to be something similar. SRS and GLL might go like 30-40%. Just a little bit above the S&P 500. So it's kind of like the anchor is the S&P 500, and then the leveraged ETFs do another 10 to 20% better on the targets, and then on the crypto targets on the short side, they're like at least 3 times to 4 times higher, and that's kind of what we're shooting for. on the downside. And here we got a retested breaker. I think we did Ethereum Classic. No, we didn't. We didn't classify it. We did retested this breaker, so we could go lower than this low. And if we were to actually hit a naked pivot and an auto support zone, that puts us roughly at 71%. So this is, and we fill liquidity on the order block, which put us at 76%, 70% to 76%. So we'll just kind of put this in the middle, 70%. So I mean, we're gonna consolidate, of course, but just not right now. So here is another one, Link. This one with the naked breaker, it almost seems like it's almost there. But say we go in the naked breaker and we hit the fair value gap, or we hit the naked pivot, that only hits us at 40%. This seems pretty average, and for a wick to the downside. So I mean, we'll put like the average pool around 40%, or for leveraged ETFs. And I mean, we want to hit some like highbrow stuff. Definitely 2024. We're probably looking to go down there, but it's good we mapped out ahead of time. But as far as target wise, we're trying to shoot for something that will give us a high amount within this short time period. Here, this looks like a breaker. It's just a different color. I don't understand why it's gray. Yeah, I have no idea, but I know that this is a breaker here retested. So we retested this breaker, and this has got the bulls here. Liquidity's up. We didn't have any naked pivots here. If anything, it's going to stop this out probably 20 to 40% right here. Yeah, 30%. So, I mean, I don't even know if it's worth putting in the average pool, but we could just put it at the bottom of the average pool. ADA, okay, so a lot more lines, but support and resistance is down here, which I think I would reserve for 2024, roughly. Here's a breaker candle to the upside. If we were to use this fair value gap as the support of where it would stop from the breaker, puts us roughly at 67%. If we just reach the end of this, if this naked pivot, that puts us at 54%. If we reach, I would say this is 67 to possibly, I don't know, 80% on ADA. It's hard to say. You almost have to assume that these bulls will hold here on the liquidity, but I would want to err that this is the minimum. I mean that I want to err that this is the minimum, and then this is the max, coming all the way down here. That's something I kind of have to reflect upon here. Here, again, it looks like I forgot to mark these weekly ones as gray. I don't understand. Maybe it's just some laziness. But let's go ahead and get rid of these here, just so we can understand it correctly that these are weekly ones on Cardano. Cool. And then I guess I didn't get any naked H4 pivots, so it changed these things that now I know that's a weekly. Here's one. Oh, did it get hit? Well, let's just mark it and we'll observe later. See, this one's interesting. I guess I would count it as one. There we go. That's it. Alright, and we synced it all. Should show up here. Perfect. So now we separated the H4 from the weekly, and I guess it's going to inform our decision better. I have no idea. Um, we'll just put it all together and see what happens. So if anything, we could come into uh, this weekly and the H4 here, and maybe this is the support zone. We go down, maybe we wick down pretty hard. Maybe we go roughly to here. It would have helped if there was a breaker. I will say that. Um, and I almost want to use this weekly as the first point. So roughly 55% to like 60%. That's kind of just what I'm thinking. I mean, this is the first demand zone, and it's the breaker. And if we use the breaker candle here, and this wick on this breaker candle on the weekly, and then the fair value gap, maybe we should use this one. So 67%. I would say that maybe this is like 60 to 67% on ADA here. So, I mean, that's the best guess I can get. And then 2024, roughly going into here. But that's kind of just out of context right now. Let's go to engine. Okay, so now, so for some reason I don't have anything. I don't know. Oh, let me look here. Yeah, I don't know why I don't have anything here. Not even support and resistance lines. But I suspect, I don't know what got lost in translation here, but there's something here. Okay, I think that's it. Just one more comb through. Here's an interesting one. Okay, cool. We did good work. I don't know. I don't know about that one right here. I mean, it fits the same criteria as this one. I mean, I just hope that price is already on there. Let's go ahead and just classify it and then just take it from there. The context will guide us. And we're just really looking for confluence. And I think that's pretty much it. All right. So it looks like some of the things we highlighted have been hit already. So we can get rid of these. All right. So now we got some targets to the downside. And we're going to put it here. So interesting. That makes more sense right there. And then, is this a naked weekly pivot? No, not really. So if we were to use this, this looks like it fits the average. It hits the auto SR line, and I think this is, yeah, there's a purple naked pivot here. So let's say, and market structure break. So it looks like we're definitely going to come into this breaker. It's already retested to the upside, and it's got liquidity, and it looks like it's going to purge it, judging by this magnet here. It's around 66%, 66%. We'll put it here. Okay, so that's interesting. I didn't know that. So this one, it looks like it's almost at the bottom, so I'm not even gonna bother. Solana, it's pretty much there. I don't know that it doesn't looks like the average 40. I mean that says 72. I mean that's kind of crazy. I mean if we can get some more upside, I don't. So Solana I know is owned by that FTX guy. Like I don't know if I want to go for that. It would be on the higher tier of just things, but man, oh man, like I there's only one real. Okay, so the fib is on a range. It's not necessarily support and resistance here, and there's no real like other things on the weekly to really point that out. So yes, it's owned by the FTX guy, and the FTX people are going bankrupt, but this range goes all the way to negative 12. So I'm not really excited to jump on that bandwagon. It seems like it's a lot more speculation than what we're already speculating. But moving on for different possibilities. We're in Bitcoin land now. Wanted to see if there's any weekly naked pivots. And yes, there is. It's just classified the wrong color. If it would be nice if I classified things the right color. Oh my gosh, the naked weekly pivots are kind of crazy here. Uh, this has been retested, so we don't need to do that one. This. I don't know. I kind of want to say that's been retested, even though I just expanded it. It doesn't. So everything else, I think we're good on. Yeah, this is spiked through. So what we're really looking for is so this one right next to an untested breaker here. Interesting. This I think this breaker hasn't really been tested. Kind of. It's kind of been tested. It's just really weird. I mean, if anything, there's liquidity down here. So 2024, that looks like a good opportunity. Now, above that line, this one, we're going to replace, I think it's this one. Yep. And then we got everything else. Yep. So I think, yeah, that's everything's correct on the color there. It's just hard to see. So we haven't retested this breaker, and there's a fair value gap here. So it looks like the obvious first place that it will get magnetized to and bounce on possibly the fair value gap. It's the possibility is anywhere from the top of the breaker to the fair value gap, and I, I've seen things to where the retest goes below the breaker, um, and so let's go ahead and quantify below the breaker into the fair value gap. Hey, we're at the average, expected drawdown for almost everything is 30 to 40%. 20 to 40 is like that average range that we kind of want to get away from. And Yeah, I don't know. This could go 40 into that weekly pivot right here, and then it happens to have a fair value gap here. So this seems like the most likely, but it's average, and that's kind of sucks. I don't know. Even if we were to go to this H4 naked pivot, it's only 45%, and who knows? I don't know. This also has a possibility. I mean, two weekly breakers. It's just the first breaker hasn't been retested here. This breaker's been retested. So it almost we could almost assume that this is it. It's just 33%. So it's ranking pretty low on the target score. So sand is a little interesting. Like it's kind of difficult to dial in on what it's saying here. We got some auto SR lines, and we are in a retest on the breaker. The only things we can really go off of is these H4 naked pivots and this fair value gap. Maybe we reach this fair value gap here, and that's it. It's just the confidence level isn't so good. But when it comes to 2024, it would have been a good short. It's just we can't assume it's going to go to this naked weekly pivot uh, right away and go straight to this weekly breaker that's untested. I mean, it could. This is kind of this weird speculation land where we kind of have to make a guess, and these naked pivots present a problem. If anything, I would like to kind of keep sand in the loop, which it is. It's at 40%, but not necessarily stack the deck in it. So, like, if anything, we could put like this section one as uncertain, but equal vol. We'll just put uh, equal potential. We'll put it as potential, and we just don't know. We can't use that as something we're willing to stack the deck in. I think we looked at Soul already. It's just weird. We looked at that. E-Gold. I don't know. Like, we're pretty darn close to zero, and I feel comfortable with going to 6. That's my target. All right, Phantom. I was able to get some support resistance lines. We have a naked breaker for retest, so it looks even better. We do have a weekly pivot here. We would have purged this um, weekly order block, so it could stop here. And then if we were to probably be in 2024, we could probably reach all the way down to here, which would be 80%. So this is looking like an average pool, just for hitting this weekly. If we were to go here, we could see there's the weekly naked pivot, and we got range. And if we were to just do the range, roughly, I think that were to put us in the negative zone. So the best was just to put this naked pivot on the weekly, and then just see what happens. And this naked pivot on the weekly has already been to be tested. The lowest one hasn't, so it's fair game. But we have to see how this does right here in this weekly naked pivot. We have no idea how strong it will be, but stopping out these bulls on the weekly and into this fair value gap is like the best thing I could see happening, which would put us in the average pool, right? Roughly 50%. So we could put it at the top of the average pool. So that's something to keep in mind going into. I don't know, and it could retest this breaker, this naked weekly breaker. So that's kind of just the weird thing. This might be suggesting that we wick down below. We touch this here, puts that at 69%, and it closes the week above, like a huge wick down. Maybe this is just a wider range that we'll shoot for. So this could range from 70% on the high side, and then roughly, I don't know, 30 to 40% on the low side. So this is Phantom. So we're just gonna have to put a new subheading and just make it kind of potential. Maybe it's got potential for giving us. So we'll put it under sand. So we'll just put it for, and then we'll put this as like undesirables. All right. So there we go. It's separated. So I think that's it on classification. We still have Doge, but we can't short it, so we might as well just put in undesirable. Portfolio or sushi, it looks like it's not really something we can really look at. Ethan Litecoin. So here we go. It's the last two. And let's go ahead and take our ruler. So we hit the first naked pivot. We got it 52%. We hit the naked weekly breaker. We're at 60%. And then is there naked? So we hit an auto SR here. Auto SR at 66%, and then weekly H4 naked pivot at 72%. So this looks really good for a nice short to the bottom, and we could probably go here to 2024, stopping out that liquidity. But I think a retest of this breaker, it could either hit the top end or it could hit this naked H4 naked pivot. So we could say the range is anywhere from 60 to possibly 72%. So on high confidence, 60 to 72%. So we could put that there. And then Litecoin, I don't know, it doesn't look good. So basically, we got Matic, Ethereum for a wide range. High confidence range for Ethereum Classic, 76%. And it makes sense that Ethereum and Ethereum Classic are somewhat near each other. Atom, we got some lower quality ones. But to put all these equal weight wouldn't be a bad idea. And then we really, so potential, the ones for potential, we have to decide whether we totally shut it out. But if we were to just focus on a couple to just spread upon evenly, let's see, what ones do we have? Yeah, you see, I tried to add short on Dodge, it won't let me. So we got portfolio. I mean, this is these look at here. We got Link, Atom, Sand. So Link is in the average pool. So let's go ahead and get rid of Link. Link. Okay. So we got rid of Atom. So Atom is in the 60 to 66%. So it's cool. We'll keep it at 40%. Negative short, 40%. We got Sand. So where's Sand? Sand is under potential. So, whatever that means. This is just hard on these potential ones. Like it's such an gray area. Like it's so difficult. The best you can go off is like some weak kind of information. Definitely 2024 would be down here, but I don't know. It's probably a fill this fair value gap in reverse. I don't know. It's just we're definitely into demand right here. So if anything, right here or this naked pivot here might be it. And I don't know. It's just so hard to make a call on this thing. And I don't know. If we put the ones for potential in this kind of pot, we put all those like 40% were good, and then these we kind of stack it up a little higher. Um, or we could just put it all 40%. 1, 2, 3, 4, 5, 6, 7, 8. So roughly 8 coins. Uh, 1, 2, 3, 4, 5, 6, 7. So we got 7. I think. So we added Matic at negative 50. We got Ethereum Classic, eGold. Let's get eGold out of there. Phantom is 40. Sand is 40. Atom is 40. So what is? So we got Sand and Phantom. Those are here. Engine is the 40, and Ada is another 40. So let's go ahead and just put it in there. So Engine. And then, what was the other one? Ada. Cardano. All right. 1, 2, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 coins? 1, 2, 3, 4, 5, 6, 7, 8. What? Atom, Ada, Engine, Sand, Phantom. Atom, Engine. Oh, here we go. 1, 2, 3, 4. Skip 5, 6, 7, 8. There we go. Now we're all accounted for. So, yeah, we're just going to put it all equal weight, and we're going to see what rises to the top. Yeah, that's it. So we're going to see what happens. We got to set alerts for whenever it reaches there. But so our expectations is that we got S&P 500 as I think roughly 70%. We're expecting with a 3x leverage on the short side, or 80%. 3x leverage on the short side puts us roughly around 40% to possibly 60% of the downside. That's the main thing we're going to be watching. We got GLL at 20% and SRS at 20%. This is kind of a little bit of a wild card. We might get 20 to 40% on there. I just kept it in there. It's definitely not weighted the same as the cryptos to the short side. But we want to be open to the possibility that in the recession that both of these fall pretty hard. If a recession comes, obviously. And that's kind of our bias right now. And then we took all of the coins, and we have certain confidence with some and with an expected range. And we're going to just kind of set alerts for those ranges. And we're going to just profit. We'll just take profit right around there. Not sure if we'll go long. We might, but I don't know. We have to see. I want to see some confirmation of the upside before going long. But for equal weight, puts us for low vol on making sure we profit the most. It doesn't set us up for the most concentrated profit by only betting on like 4 or 5. That's something I would like to do, but we just took out like 2 out of potential land, and with 2 wildcard potentials, I don't want to bet heavy on that. And even if I were to just bet heavy on Matic and ETH and Ethereum Classic, I don't know. It just that's a possibility. I don't know. I just don't. I want to see if maybe I want to spread out just to see if I can get a wild card in there. 40% with a wild card that could hit 80%. um, by having my hand in a couple coins. Um, I think that would make the difference comparatively than focusing on three. Um, Even four. Like I want to spread it out 40% at all, and maybe one of them hits an 80%, or something like that. Maybe two hit an 80%, and I think that would kind of make the difference. If they don't hit an 80%, I still think I'll perform well in the portfolio. On the short, if it were to go down on the short side, just with 80% short on, I mean 3x short on S&P 500, 40% leveraged on short gold and real estate, or 20 each. So I don't know. I think it's set up pretty well, and if it became mediocre, I would roughly average, I don't know, 60% on the downside. I think it's not a bad thing. If anything, like I'm trying to supersede 60%, and I think with the way the portfolio is, I think that's the highest possibility of happening the way it's weighted. So we'll see.